Okay, so let's go through the question. So we have a couple of adjustments in this. First, we have salary in the P&L account. But let's begin with the format. And we always begin the format with the net profit. So net profit is 2,03,000. Next step, add transactions that reduces net profit. This we have first inadmissible expenses, which means not allowed but debited to P&L account. So this is what we have to figure out from the debit side of the P&L account. First is salary. So salary is a business expense, as you are aware. Discount allowed is related to business. Similarly, audit fee is also related to business. Now, what's with this Muhurat expense? Now, income tax has specifically allowed festival and Muhurat expenses to be allowed, even though it might sound and definitely it makes sense that these are personal expenses. But considering the religious and cultural sentiments of Indians, income tax department has taken this call and has permitted assessees to deduct both festival expenses and also Muhurat expenses. So Muhurat is basically a specific time for commencing a particular activity, and the time is decided based on the uh, various factors, based on the astrology and other factors. The timing is decided to commence a particular activity. It may be inauguration of business or commencing a new store, can be anything. So the bottom line is festival and Muhurat expenses, even though they definitely sound personal expenses, are specifically permitted. So this is allowed. Next, you have loss due to fire, which is a definite loss for the business, and hence it is inadmissible. Okay. Now next we have loss due to fire is a business expense, so it's allowed because the assessee has lost his stock in trade on account of fire, so therefore it is allowed. Next is donation to NDF. Now what does this NDF means? NDF is National Defense Fund, and you people are aware that any kind of donation, no matter to whom it is given, why it is given, the moment you see donations, it is expressly inadmissible expenses. So it doesn't matter to whom it is given. So donation to NDF, National Defense Fund, for the purpose of deducting this from P&L account from business is inadmissible expense. So we won't be allowing this as an expense. So we'll write the first one, donation to NDF, 20,000. So 20,000 is inadmissible. Next, you have something called as law charges, which also has an adjustment. So let's see what's the adjustment. Law charges is in connection with protection of trademark. Law charges is in connection with protection of trademark. Okay, so is this allowed? The answer is, what is a trademark? Trademark is basically an intangible asset, a property of business using which business generates revenue. So this asset has to be protected. Others can't use this, other can't misuse this. So I think some of them have tried misusing this, and the SSC has filed a case. Therefore, SSC has spent some money on this. As per the question, let's see how much is being spent on law charges. 14,000. So is this 14,000, which is primarily spent on protection of trademark of business, is this allowed? The answer is yes, because the SSC has spent this for the purpose of business. Gifts and presents for publicity, and publicity creates sales. So therefore, this is also in connection with business. Next, you have health insurance premium, 16,000. So health insurance premium 16,000, and it says 50% of the health insurance of employees have been paid in cash. Now, what's the rule pertaining to cash? The rule pertaining to cash is that any expenses paid by cash which is above 10,000 is inadmissible. But here, when we say 50% of 16,000, it comes to only 8,000. So technically speaking, it is allowed because the limit is within the stated limit, which is 10,000. And health insurance for the employees is an admissible expense. But there are certain provisions related to payment of health insurance, and we shall discuss that in the fourth chapter when we study deductions under section 80D. But for now, let's not talk about it. Let us purely discuss from the viewpoint of income from business. And as far as income from business is concerned, health insurance premium for employees is a permissible expense, and the entire amount will be considered as a business expense. So So this adjustment shouldn't be a problem because 8,000 paid by cash is well within the limit of that 10,000. Repairs and renewals, 30,000 is being spent, and as per adjustment number 4, repairs include 8,000 being expenditure on construction of washrooms which were completed on 30th September 2019. So repairs includes construction of washroom, and if washroom is a permanent building, then the value of that washroom will be added with the value of the building and recorded in the asset. So this is a capital expenditure. The bottom line is that this is a capital expenditure, and you know capital expenditure is inadmissible. It's a balance sheet item. So therefore, in this, what is not allowed is the amount spent on construction of washroom, which is a capital expenditure, and the amount which is being spent on construction of washroom is 18,000. So 18,000 becomes inadmissible expense. So we should record that here. Repairs and renewals of washroom, which is actually a capital expenditure. The amount spent on this is 18,000. Now, since this is a capital expenditure, the SSC can claim depreciation on this. So depreciation is yet to be charged. So I'll just put a star mark there. We'll do that later. Advertisement, and advertisement also has an adjustment because some part of the advertisement is a capital expenditure, and that capital expenditure is in the form of a signboard, a neon signboard, basically a kind of decorative light signboard. So let's put that here, neon signboard. So neon signboard is a capital expenditure. So advertisement purchase neon signboard. So what is the signboard cost? It has costed 15,000. So we'll write that here. And it further says advertisement also includes 2,000 being spent on insertions in the newspapers. So this is a capital expenditure. So this does not require your attention. 15,000 is a capital expenditure, but 2,000 is a revenue expenditure. So when we say insertions, basically you are aware that if you read newspaper, there's so much of papers which are being put inside for advertisement purpose. So you give money to the advertisement agency guy, and they will insert all the papers for a certain amount. So this is a revenue routine expenditure. So this is allowed. So this is not a concern. Next, interest on borrowed money. So interest on borrowed money is allowed. If it is interest on assessee's own money on capital, then it is inadmissible. Now let's move on. Entertainment expenses. So entertainment expenses can be for employees, it can be for customers, and there is no adjustment also. So there's no adjustment. So we totally assume this is related to business. Loss of stock due to theft by an employee. So employee has stolen some goods. So definitely this is inadmissible. Sorry, definitely this is admissible expense. It's a business loss. GST penalty. Now GST is an indirect tax, but here the SC has not paid GST. He has paid fine on GST, a penalty on GST. So why? Because he has not followed the law. He has not followed the procedure. So any kind of penalty for that matter, whether it is GST or something else, penalty is inadmissible because an assessee would end up paying penalty only if he does any sort of violation of law and the provisions of the law. So therefore 12,000 becomes inadmissible expense. Next, you have staff welfare expense. We have discussed this previously also, that staff welfare expense is a business expense and it is allowed. But staff welfare fund is inadmissible. Gratuity, which is mandated by law that every employee, provided he meets, every employer he meets certain conditions, should pay gratuity to employees. So this is also a permissible expense. Depreciation 1,20,000. So let's see if there is any adjustment on depreciation. So nowhere there is an adjustment. So we assume this itself is as per the provisions of Income Tax Act. Next, you have sundry expenses, and for sundry expenses there is in fact an adjustment. So let's see what is the adjustment. Now, as per the adjustment, sundry adjustment number 5, sundry expense include a gift of 2,000 given to a GST officer on Diwali. Now, who is this GST officer? Is he an employee or is he a customer? The answer is none of these. He is not a customer nor he is an employee. So therefore, he is not nowhere associated with business, and therefore sundry expenses in this gift given will become inadmissible. So gift to GST officer becomes inadmissible expense 2,000. Next, drawings, and it's quite simple. Drawings is a personal expense 20,000 rupees. So net profit we have already accounted for. Next heading will be admissible incomes. Allowed but not credited to P&L account. So if it's not credited to P&L account, it should be in the adjustments. So let's see if there is any income in the adjustment which needs to be recorded. The answer is yes, the last one. A payment of 30,000 received from a customer is not recorded. Payment from customer. 30,000. Stock we do not have in this question. So overvaluation of opening stock and undervaluation of closing stock, both are not there. So we are done with part 2. Now let's quickly do the totaling. Total of and
Sir, how do we calculate VAT for no debt, sir?
Okay, so let's work on the step 3 now. Under step 3, the first sub step is admissible expenses, which means these are business related expense and these are the expenses which are allowed by income tax department, but the SSC has not recorded this in the profit and loss account. So we have to locate this in the adjustments. And as per the adjustments, there are a couple of items which we need to account for. One is SSC has spent money on neon signboard, and the amount of neon signboard is 15,000. So on this 15,000 depreciation needs to be charged. So depreciation on neon sign board. Now let me also make an important point here which I want you people to pay attention to. If you look at here, there is a depreciation 1,20,000, and since nothing is mentioned, so we assume this itself is as per Income Tax Act. Now the SSC has bought two assets in the previous year. One is a washroom and the other one is neon signboard. So these are the two capital expenditures on which depreciation needs to be charged, which means that this 1,20,000 does not include depreciation on these two assets which were purchased in the previous year. But sometimes what the question will say is that advertisement 15,000, let's say depreciation, and this depreciation is already included in this. If the problem states that, then you don't have to calculate it again. But since here it clearly says that, and you have also been given the hint of rate of depreciation in the bracket, that means you have to charge it, and this depreciation is not included in the profit and loss account, right? So 15% is the rate of depreciation on neon signboard, 2000 to 15,000 15%. Next, we have depreciation on washroom. Washroom is a part of the building. So the amount being spent on this is given here, 18,000. And the rate of depreciation for building is 10%, which is also given. And date is mentioned. So does this date have any significance? The answer is yes, because as per the rule, if the asset is put to use for less than 180 days, then what happens? You have to charge only half the depreciation. Asset is put to use for more than 180 days, then you can claim full depreciation. So here the number of days is obviously more than 180. You have to calculate the days if you want. So you can count. September anyways is over. So last day of September, October, November, December, January, February, March. March the year ends. So when you count, you will figure out that it's more than 180 days. So therefore, full depreciation is allowed. So we'll take 1,800. These are the only two items which weren't recorded. Now we have recorded this. Now quickly let's go to the second important step, second item under step 3, which is inadmissible incomes. Let's look at the credit side of P&L account. The first one is gross profit, which is an accounting adjustment. Then you have commission. So commission received from wholesalers, suppliers, distributors is a business income. Sundry receipts. So these are various small business incomes which are summarized into one single transaction called sundry receipts or sundry incomes. Rent from house, let out house can't be a business income, and as you are aware it is also taxable under a separate head of income called income from house property, and therefore this 30,000 is inadmissible item. So this is inadmissible. Profit from sale of machine. So profit from sale of machine is taxable under the head capital gains. Whenever you buy and sell an asset, and if there is any profit or if there is a loss, then it becomes taxable under the head capital gains. So therefore this will also not be considered as a business income, and hence it is inadmissible. Profit from sale of old machine. The logic is simple. As an SSC, what you sell in business is your current asset, which is stock in trade, inventory, also known as goods. You don't sell fixed assets in your shop, right? You sell your current or the inventory. So when you sell your fixed assets, it becomes taxable under the head capital gains. He has sold one of his old machine and that too at profit. So therefore it is inadmissible. In case if it is sold at loss, that is also inadmissible. Difference is that becomes inadmissible expense and this becomes inadmissible income. Next, bad debts recovered, and nothing is mentioned in the brackets whether it was allowed earlier, whether it was not allowed earlier, and there is absolutely no information in the question. So in this situation, what should we do? Because if in the bracket it mentions earlier allowed, then we treat this as admissible income. And in case if the in the bracket it mentioned earlier it was not allowed or earlier it was not written off, then we assume it has inadmissible expense. But here there is no data, so that becomes quite challenging. So shall we add an adjustment for this? Let's make it a little interesting and write one adjustment. 50% of bad debts. So you have to also make a note of make a change in your booklet, in your study material. 50% of the bad debts recovered were written off earlier. So what it means is bad debts recovered, 50% was written off earlier, so remaining 50% was not written off earlier. So the amount which is not written off will become inadmissible expense. Not. But let's assume, let's go by the original situation. Let's go by the way it is in the question paper, in the question. Imagine nothing was mentioned here. What you would have done, assuming adjustment is also not there. In that case, you would have assumed the way you wanted it. Either you would have assumed it is not written off earlier and you would have treated this as inadmissible income, or you could have assumed that this was written off earlier and hence it is admissible and no treatment is required. So you should make an assumption and write it in the note. What is your assumption? As simple as that, right? You guys are in sixth semester, so I don't have to tell you in detail if there's any missing information what you should do in the question. So you have to assume and write your assumption. But here, anyways, we are not doing any assumption because we have added one small adjustment on this. So our problem is solved. Now the last item is interest on income tax refund. First of all, what is income tax? It's a direct tax. Any direct tax is inadmissible when you pay. When you're getting refund, it is also inadmissible, right? So therefore, this is an inadmissible income. Interest on income tax refund. What do you mean by interest on income tax refund? So Supreme Court has ordered income tax department that if they don't process the refund within the prescribed time which they have already predefined, they are liable to pay interest on a daily basis to the assessee. So it's a mistake of income tax department, for which they will pay you interest, right? But this is nothing to do with business. This is not earned by buying and selling goods, and nowhere it is related to sales, or neither it's an activity related to sales. So therefore, this interest on income tax refund has nothing to do with sales and activities related to sales. Further, this is a direct tax. So when you pay direct tax, it is inadmissible. So when you're receiving refund, also it is inadmissible. But in case of indirect tax, it's opposite. When you pay indirect tax, it is allowed as an expense. And in case if you receive any refund from in the form of indirect tax, that is also allowed as an income, right? So since this is a direct tax, we will not allow this as an income. So this is inadmissible. And in case if interest is received, the logic is simple. Interest received from whether GST or income tax, interest is nowhere associated with sales. This has nothing to do with sales and activities related to sales. So any which ways, this will become an inadmissible expense. We have dealt with all the adjustments. We have only two items, C and D, which is undervaluation of opening stock and overvaluation of closing stock. So let's do the totaling. You guys please do the totaling and tell me what are the totals. A section class rep, what's the total? I'll just unmute all of you so that you can ask me any questions if you have. Okay, you can go ahead and raise your questions on the question what we have done now.
Sir,
Yes.
interest on government securities.
Okay, we have missed out on that.
Yes, sir.
Okay. What's the amount?
20,000, sir.
Okay. Yeah, I think we are done with all. So this is in fact a last question on this concept income from business, computation of income from business. So next we will be moving on to income from profession. The first chapter is titled as profits and gains from business and profession. So there are two concepts. One is how to compute business income of an SSC. Second, how to compute income from profession. So we have done a couple of questions. I think we have done so far seven, including one practice question. So if you have any questions, doubts pertaining to all that what we have done so far, you can get it clarified. And in case if no question is coming to your mind at the moment, you can do it later also. So has anybody done the totaling of step one and two?
Step 1, it's 3,20,000, sir.
3,20,000. Okay. And step number three,
It's 88,050 rupees.
including interest on securities, right?
Yes, sir.
What's the final answer?
2,31,950. 31, sir.
Okay. Okay. So try to solve the practice question which is given in the handout. And in case if you have any doubt in any of the transactions, please message me on MS Teams and I'll try to answer that. So we'll wind up today's class since none of you have any questions, and we will meet in the next class with a new topic, income from profession. So in case if you are done, you can leave the meeting. Anyways, I'll be sharing this file with you on MS Teams.